Good morning. I'll just wait for 2 3 minutes so that people will join me and then start. Right. Meanwhile, how are the markets trading these days? All right.
From the past 2 days, the Nifty has grown to 100 points.
Yeah, last 2 days I cannot comment. Last 1 month I'm not supposed to comment, but anything other than that, more than happy to comment. And then we'll take a lot of questions in the end. So maybe 1 or 2 minutes. I'll start my presentation today. But any other questions? Other than that, we can definitely take it. Before I start my thing, just a brief introduction: who I am, what I am. I'm Bharat. I've been in the market since 2007. At least I'm a full-time trader. I'm an investor for 16, 17 years. A full-time trader almost about 10 years ago. I became a full-time trader. Quit my job. So I was a engineer. I was a mechanical engineer by profession. So when the markets were generous enough for me, I had to take a call to quit my job and become a full-time trader. So I trade Nifty, Bank Nifty, all the index options. I trade stock options. Uh, Going good. Yes, I have my share of bad trades, bad days, good days. Everything was there, but I am here only because I have made in number of mistakes that you can always make. Right? I have made all the mistakes that you can possibly count on uh, since 2007. But market has been very, very generous because you need to learn. Unless until you learn, unless until you keep improving your game, it's no way that you will be able to make it to the top. Because you see, as soon as you log in, there is a disclaimer by the SEBI itself that 10% people will actually make money, 90% do not make money. Right? So now, if you want to reach there, obviously you will start at the bottom 90% only. We will always be part of the crowd first or the failures first. So how do we reach from 90 to 10%? The 10% people who actually make good money in the markets, right? Even very good money is made only by the top 1 or 2%, right? So how do we reach there? So keep learning. That's what I'm trying to do. This webinar probably I'll try to uh, make you understand how to read the markets. How to read the markets is what we're going to learn. How actually the institutions see the market. They'll always leave a footprint. It's not like it becomes a very what do you call? Just give me a sec. Just give me a sec. All right. Yeah, back with you guys. So what I was telling was, every trade that's going to come in, they'll leave a footprint. But what we're concerned about is the bigger guys, the institutions or the strong hands, what we call it. So I'm going to introduce a lot of concept like what is weak hand, what is strong hands, how do they leave the footprints, how do I read the markets the way professionals do. That is the subject matter of what this webinar is, and this I've learned a very hard way. Markets have never been. See, market is a place where markets never show mercy to anybody, right? Markets never show mercy. They don't have to show mercy to you and me. We are always at the mercy of the markets. So one thing I have understood in the markets is you have to keep your ego aside. Unless until you bow down to the markets, markets will never ever reward you. And it's not like you write your exam today and you will get the result tomorrow. Markets will not be so patient to give you the result some other day. It's going to give you result straight away. Your P&L will be the judge of your performance there, how well you did and how bad you did, right? So now I am going to touch upon a couple of aspects. How what happens? See, whenever there's a business, this stock market is a business, so we have to approach like business. Now, when I'm doing this approach like business, what are the steps involved in a business? There are steps involved in the business. First thing is, there's a business of making decisions in the market, right? We'll have to constantly make decisions. And how do I make decisions? Probably somebody would look at what decisions you'll make first and foremost. What decisions you'll make? There are only two decisions you'll make: either buy or sell. Now there may be n number of factors which is probably prompting me to take a buy decision or sell decisions. So generally, what we follow, we look at fundamentals, we look at technicals, we look at derivatives data or other data on the cash market side. Probably there are people who like now looking at astrology also, right? They people and a lot of people, majority people who look at news, right? These are the ways. So as soon as you log in, there are two regions. So as soon as you log into a system, if you look at this, there is a buy or sell decision, right? So whenever you look at this, either buy or sell. So now if I'm trying to buy, it'll ask you only two things here. It'll ask you to buy at what price you're going to buy and at what quantity, at how many quantities or how many shares you're going to buy or how many lots you're going to buy in terms of derivatives. So only two decisions, two outputs basically. These are the two informations you're going to send to the exchanges. The price that I'm willing to buy and the quantity I'm willing to buy. So how did I arrive at a buy or sell decision? All depends upon your analysis. Could be FA, fundamentals, technicals, derivatives, astro, news, any number of things, recommendations, any number of things you could probably use as a tool to make a decision here. Now, understand this, and I am mostly concerned about this. If you are following any of those things, that's fine, but I'm only concerned. One of the most difficult things that probably influence our trading decisions in our day-to-day life is news. You are watching all the television news and the financial news. What is happening in the financial news? See, there is a campaign. So whenever you look at this, right? Whenever there's a business, I said there's a business, and whenever there's a business, there's always a ad campaign. When will the ad campaign comes in? So whenever the markets are making a higher rise and higher lows, markets are almost at the peak. Markets are almost at the peak. This is where a lot of campaigns will come in. Campaigns about what? That stock market is beautiful. If you have invested X amount of money in 2006, 2007, this is the returns you would have made. Or probably if you invested in 2020 COVID time at X rupees, would have been 3x or 4x, 5x. These kind of campaigns will start happening. Why is this? These kind of campaigns will start happening is the first question. Why other news channels are so in favor of me? They love me so much that they're going to start campaigning about a stock or campaigning about stock market at 2026. That is when, see, basically the Times of India, basically it's ads of India. You will never ever hear about stock market much on the Times of India. But when I start seeing stock market news on the front lines of, if it is a economic times, it's a different story. But if it is Times of India kind of a thing, I am a little more concerned. But why is this news reaching a common man, right? Why is this thing common man? What is the agenda behind this? Is the first concern I always have. Whenever there is a lot of advertisement, I'm questioning, why is this? Why the news channel is so favor of me? Why do they love me so much? This is a brutal business because your profit is my loss and my loss is your profit. It's always this game in derivatives. Cash market's a different story, but when it comes to derivatives, the volumes that we see in derivatives market is such that it is always a zero sum game. Correct. Now, why is it so? Why are they so interested? Why are they so concerned of that? I should make money. Why are they calling me to invest? This is the campaign you should always be worried about, right? This is where the euphoria will set in through a campaign that will happen. Most often than not, there will be a lot of good news around. Takes a lot of examples. Take a lot of examples there. By the time you and me hear the news, because we don't make the news, we consume the news. So by the time you and me hear about the news, the market's already done or discounted it. Now, at the peak of the bull market, what will you see? You will see a fantastic euphoria in the market through campaigning, through ads, through news, whatever it is. So that means basically invitation to participate in the stock market. Why are they asking us to participate? Basically, the strong hands which actually picked up the stock at a very throwaway price, when they saw some value in the stock, they start picking up the stock, and they have to sell it at a higher price to book their profits. Now, the institutions cannot sell it to an institution again, right? A smart money cannot buy from other smart money at a very high price, very high valuations. We need somebody who are ignorant in the markets, who are somebody called as weak hands, who basically thrive or make decisions based on the news. They are the kind of people they're actually looking at. Why are they looking at that? Because it's an easy exit for them. So when the euphoria is setting in there at the top of the bull market, there is a euphoria setting in. Probably not so smart money is getting into the market through the news. Smart money who bought at the low, they started exiting at the top. Now, when you're exiting at the top, we call it distribution, and the distribution will leave a certain footprints, not just in the price, because price will not give you the entire story. Because when you look at this, as I said, when you putting a buy or sell decision, the price is the one which you will sell, which you're going to send it to the exchange along with the volume, the amount of shares that I want to buy or sell. Basically, look at the volumes. Both will come together. If I try to analyze only with the price, I am doomed. I have to add volume to it. This discussion today will tell you how to add volumes also to this, right? I'll continue further. So at distribution, there is a certain footprint which we're going to discuss. So once the strong hands have offloaded, and they cannot offload overnight because the volume of shares that they have bought at the bottom is so huge that they need at least couple of months to unwind their positions. So when this is happening, right, there's a certain footprint which we'll discuss once I finish this emotional game that we are always played in the market. So there's a distribution. Out of this euphoria, distribution has already happened. Now the strong hands are out of this market. There is no support from the strong. The strong hands basically big money. They are buying because unless until the big money is not buying, market cannot go higher and higher. The big money is out of the market. Now the money is sitting with the weak hands. I call it as a weak hands. What are weak hands called as? Weak hands are the people who bought at the wrong price. They thought, okay, they have made the smartest decisions of their life. They bought at the wrong price. Now they are stuck there. The weak hands are stuck, strong hands are out of the market. Now what will happen, since there is no buying in the market, there is no support from the buying side, from the strong hands, what will happen is market will start breaking these supports and start rolling down like this. Usually the you know this age old adage, bulls will take a year, or the bears will finish off in a day or two, right? It is always like that. So bear market will be very, very quick, very, very fast. Why? The strong hands are not buying the market, supporting the price. So bear market, you will see markets going down. These weak hands, look at see, you should always analyze this market on the psychological front. There are two forces in the market. One is the bulls, other is the bears. What are they doing? Who are stuck? And what are they thinking? That you will see. You will be able to sense the fear in the market. Right now, as the market starts rolling down, these weak hands had a hope because they did not buy in the bull market. They bought at the peak. When they start buying at the peak, they are stuck in a bad position. The market start rolling down. They are hopeful that market will recover maybe today or maybe tomorrow. Right? But at some point in time, the news is still not bad yet, but their P&L is looking very, very bad. This is what you will see in the market. These are motivated guys who are probably on the edge. They want to exit. Either they're hoping that they'll get a better exit, but let's see what will happen. So now probably at the bottom, what you will see, you will start getting very, very bad news. Now this will lead to a panic because they're already sitting on a minus 30 minus 40% loss on the portfolio. Now it is coupled with a very bad news from the market. Now what will happen when the bad news come? They panic. They are already on the edge. Now you push them further. What will happen is market start rolling down further and further. This is where this market would have already gone down 50-60%. When it comes to index, maybe 30-35%. Individual stocks can go further down 50-55-60% also, right? So now this is the panic. Now if you look at this year, there is absolutely no fundamentals because by the time market turns around here, the fundamentals are not supporting. Technicals are not looking good. Fear is there in the market. Fear is there in the market. Technicals are not looking good. Fundamentals not looking good. And now the news also start looking pretty bad. Now there's a motivation for these guys to exit. Now this is where the panic kicks in. Out of this panic, they'll start exiting. I'll give a classic example of this, right? Let me pull up a chart and show you what was happening there. Let's pull up a very simple example on Nifty chart. You guys all remember what was happening in 2020 COVID time. When was the lockdown that was announced in the Indian market, if you remember? It was on March 23rd or March 24th is where the announcement happened, correct? Let's take a look at this. I'll go to 2020. 2016. Let's pull up a couple of examples here, right? This was the place. Now I want you to go look at this here also. Lockdown in 2020. When was it announced? Why am I saying that? Is because you have to understand how the news will flow. What is your psychological mindset there? See, nationwide lockdown was announced on March 25th, May 30 to May 31st. That was when actually it's like a the bad news actually sinking in into us, right? Till then we were hopeful that okay, nothing is happening, right? But it wasn't the case then. So March 25th was the where the news announced. Look at, go back. I want you to reflect on this. March 25th, when the lockdown was announced, what was the psychological mindset we had? We were fearful. We were scared of what the market was going to do. Now, till now, the fundamentals were not actually bad because lockdown was not there, not in enforcement. The business was still running, right? All the business was still running. Now, post this is where the business was shut. That is when the fundamentals, your profits start coming down because of the shutdown here, right? Fundamentals were still looking good. There was a panic here. There was a fear here, right? Post that only fundamentals start looking bad. So by the time you see the market correction and the fundamentals, there will be always a delay of 1 or 2 quarters. You do not know because fundamentals will still look, because by the time you see the fundamentals kicking in, it will be 3 months down the line, right? The business, you'll get only news after 3 months, once in a quarter. Fundamentals on March 20th was still looking good. Fear was there. So who will venture into buying when the lockdown was announced? The news was just sinking into us. And the COVID, if you see, look at the COVID numbers, it was hardly about 500, 600, not, it was not in lakhs. That's were not there yet. So who will buy? There was a panic here. Out of this panic, look at the bottom that was made. March 24th, exactly one day before the announcement of nationwide lockdown, market made a bottom. This was a panic. And the bull markets always make a bottom on the day of panic, because this panic is where the institutions see as an opportunity to start buying the market. How will they do it? What will you see in terms of price and volume? I'll discuss that. I want you to connect and reflect on what you and me going to do here, what you would have done and what we would have done here. Do we venture into buying? Obviously not, right? Go back and look at the Lehman Brothers bankruptcy of 2008, right? September 15th is where the Lehman Brothers announced bankruptcy. October is where the market made a bottom here. So out of this bad news, market made a bottom. So bulls are always born out of pessimism and bears are always born out of optimism. Fundamentals at the bottom of the bear market, fundamentals are not supporting, sentiments are not supporting, news is not supporting. At the top, news is still good, fundamentals are still good, not bad. Fundamentals are still good, technicals are looking still okay. News is fantastic, obviously. But out of that euphoria, a bull market will end. We as an investor, we always seek comfort when you are investing. Let's take a very recent example. April 2nd is where Nifty made a bottom. The recent bottom this year was when? April 2nd, right? April 2nd is where the Nifty made a bottom. Now go back and look at, on April 2nd, did we see a ceasefire completely? How was the geopolitical news? Are we comfortable investing? We are so scared of what will happen. Now, recently, some news is flowing into the market saying that, okay, we have come to a conclusion somewhere. But April 2nd, there was no such news as such, which was so promising that we have to start buying it. So, most often than not, you and me seek comfort. But markets will not reward the comfort zone. It will always reward somebody who's going to take risk. So, opportunity will always be there when there is a risk in the market, not when there is comfort. Market will give comfort when market touches 26,000, 27,000, all-time highs. But that is when you have to be fearful about the market. Now, what is the market going to do here? Now, how do I decode this? How do I understand the footprint? Now I understood, okay, psychologically, you have to understand where you are feeling fearful. See, now you look at small cap and mid cap. Or how does the fundamentals look like? How does a business look like? It is not at your comfort zone. These are the stocks which will give you a multi-bagger. You and me cannot expect HDFC or L&T will become multi-bagger in next 3 years, 4 years. Yes, they get decent returns. They're looking for stability, but small cap mid cap could become the next large cap. That is where the multi-bagger will come from. But are we comfortable investing into small cap mid cap? Because fundamentals are not supporting, business are still not fantastic, right? They still have their own problems. That is where an opportunity is. So what a key takeaway right now from last 10-15 minutes of my discussion here is, so whenever you are fearful, that is where probably an opportunity is. Start looking for an opportunity. When you're very very comfortable, I don't think that is a place where you and me should be. Correct. So having said this, do yourself a favor. Whenever you look at the news channel, please mute it, because I do not want you to be influenced by what the news readers are saying there. Because most often than not, they're going to convince you, or they're going to push you into making wrong decisions. Please do not look into their advertisements. Do this a favor. I don't have a television at home. It's been 15 years. I have removed television at home. I don't follow any of the news channels. I don't want them to influence my decision. So I have to make a decision purely based on what the chart is telling me, where the footprint of these big, strong hands are sitting. How do they do it? Now, how do they do it? Now, let me give you one simple example. This price right now, what you're looking at, price is a reaction. But where is the action coming from? Take a look at this very good. Let's say if I want to buy this some stock, right? This 108 rupees. If I want to buy at 108 rupees, right? Now if I want to press 1000 quantity. Now tell me 1000 quantity. So I want to buy 1000 shares at 108 rupees versus I want to buy 10,000 shares at 108 rupees. Now tell me if I'm buying 1000 shares or if I'm buying 1000 shares, don't you think that will tell me the demand in the market, how much I'm willing to buy at what price? And if somebody puts a 1 lakh order, so the price that's going to move. So let's say I'm going to buy 108 rupees. If I buy 1000 shares, I am probably nobody in this market. Now, if I start putting add zeros next to it, that is where we will see, okay, some big money is coming into the market. Who can pull in big money? Not retail investors, somebody who has big portfolio in their hands, in their disposal. That is, they're the people who can probably put in money, right? So whenever they see the price is basically a reaction to the action that has been built. What is that? The volume. So the price is a component or directly proportional to the imbalance in demand and supply, right? So the key here is how much volume is coming into the market. That is called as an activity. It's like simple. Take a very simple analogy. There is a car, right? The car is like a price. The car is like a price, but the fuel and the accelerator pedal that you're going to press, that is the volume, right? Without volume, without the fuel in the petrol tank, the car cannot move further, right? Don't just analyze the price. Just because you have the car, you have the key, doesn't mean that market will go or the car will move further. You need gas there, you need petrol there, you need to pedal that. That is where the volume comes in, right? Effect, cause and effect, right? Newton's third law. For every action, there is an equal and opposite reaction. So price is a reaction. The action is always like is gonna beyond the price there. This is what you want to see. So the amount of buying that you're going to see, right? The amount of buying that you're going to see. See, there is common myths about volume also. Understand this. Okay? There's common myths. So for every buyer, there is a seller. Not necessary. You bought 10 shares, but there are 1000 shares to be sold. There's a lot of supply which you and me cannot see. You sold 10 shares, but there are 10,000 orders to buy. So it's not that for every buyer there is a seller. It's not like that. There could be n number of orders which is still sitting on the system, which is yet to be triggered. So which we do not know. So the key always lies in the volume. How do I analyze volume? Not just the volume. I want to analyze along with the price action there. Now what you're going to do is we're going to analyze this pieces together. One is the price, other is the volume, right? We call it cause and effect relationship. Now, if there is a huge candle, if there's a huge candle opening here and close here, so from I'm going to introduce something called as a VSA, volume spread analysis. What is this spread? VSA, the spread is basically the difference between the low and the high of the day. This is a spread. Whenever I say the bigger spread, that means the open to low or the open to close or the low to high, basically low to high. Low to high is wider. Whenever I say the spread is lower, that means the open or the low versus high is narrower. Narrow, narrow spread, wide spread. So you take the difference between high and the low, you will understand what is the spread. Volume spread analysis. Now we're going to put together volume and the price and analyze how to then first thing is understand the cause and effect. Now take this cause and effect, put into the market structure there, market context. If I just discuss volume spread without putting the context in place, we will go to context later. First understand what is that volume spread analysis is. If there is a high widespread candle, usually widespread candle is what? Maybe the market has gone up 3%, 4%, 5% on that day. For a 4% move, obviously the volume should be higher. If there is a high volume with a high spread in the candle, it is good, nothing to worry about, because usually the big volume comes from the big guys, right? They would have bought big chunk of the shares on that day, so you will see a good amount of action in the price also, right? So there's a good amount of activity that is happening in the volume, which is translated into a very good price action also, a good 4-5% rally, either rally or it could be on the downside also, doesn't matter, right? So this is a very good. So there is a cause here. The cause is the volume, and there is also effect. So cause and effect are in sync today. Whenever I see high volume and a proportionate move in the price, either upside or downside, the cause and effect both are justified here. There's nothing to worry about. So basically, the institutions would have bought on this day. Now, this is institution would have bought on this day. Now I have to add this to a context. I'll add this to a context, and you'll understand, okay, how to understand a distribution or an accumulation phase later on. The second thing what you will see is, you will see a narrow spread, but a high volume. You will see a very high volume on a narrow spread. And whenever you're getting a narrow spread, it is basically not a buying activity or it is not a selling activity. Why? See, simply, have you seen this? If market has moved 3, 4, 5, 6% on that day, if you try to put a limit order, your limit order will not be executed so easily. They will force you to buy at a higher price always. If you have seen this, why are they doing this? Is because you will not get a very good fill. When you put a limit order, you will not get a very good fill on the day where institutions are buying in large quantities and the markets are rallying on that day. On this day where there is a huge volume, that means if you put a limit order on this day, you will get a very good fill. Why are the markets are in so love with me that they're going to give a very good fill in the market? Correct? That means this is actually not buying. This is probably somebody is offloading this because there is a divergence. The cause and effect are not justified here. Now I'll take the opposite case wherein you see a huge volume, sorry, huge effect here, but the cause is very, very small. This is also something which I am not comfortable with, right? This may not be supported by big activity in the volume. That means the big institutions are not backing this price move. It may not sustain, whichever direction, upside or downside, it may not sustain. Now there is a fourth one wherein you see a low volume and a low spread, which is again in sync. In the first case, the cause and effect of the price and volume are in sync. In the fourth case, the price and volume are in sync. This is where the divergence is. This is the divergence. If I put into market context, you'll understand, okay, there is something that is happening in these 2 days. I need to better be careful here. If this high volume, if this high volume along with this low spread, if this happened to be at the top of the market, now put the context there. Euphoria is sitting into the market. Euphoria is creeping into the market. Now the people who have been waiting, see, because most of the retail investors will seek comfort. The weak hands will seek comfort there. Where the comfort is when the fundamentals are looking good, technicals are looking good, news is looking good, you are feeling emotionally well. That is where you start buying. Because when they announce COVID lockdown on March 25th, you and me are not comfortable buying. We are comfortable after a substantial move. We did not buy in the first tranche, second tranche, third tranche. We start buying at the comfort zone. The comfort zone is the place where the news is coming in with euphoria, where we are comfortable emotionally. We start buying. Basically, this happens, when basically this is usually coupled with a very good news. This is usually coupled with a very good news. Very good news came. We started buying, but this buying was not by the institutions. That's the reason you did not get a price rally. You got a very good fill. Who bought this? People who were lured into the market through a good news. They are the people who got in. Now, if this happens to be at the top, I have to worry about this. This could be a climax. This we call it as a buying climax, where there is a low spread with a huge volume at the top. This is where I'm worried about. Now take a look at this. If market is going up and now you see a resistance is breaking at the top, let's say 26,300 is a Nifty resistance, right? Now if Nifty resistance breaks at 26,300, 26,400 is a resistance which breaks out with a huge volume. But anyways, Nifty is not traded. If you look at futures, I'm saying, assume this is in the cash market. If there's a huge volume breakout in any stocks at a all-time high, coupled with the low volume, that means this breakout was not staged by a big guy. This is where I am worried about market continuing in the direction. Right? This is where whenever the effort and cause are not in sync, there is a divergence between them, and add this divergence to the market top and market bottom, you will see some footprints there. Am I making sense? So these are signs of weakness for me. Now low narrow spread with the low volume is that's why no institutions were there. So market did not move up big. That is common there. This is common. This is common. These two are the places where you need to be worried about. Right? Let's take a couple of examples on the chart, and then we'll see what is that going to happen there. I'll just add volume. This Nifty, so I can't get volume. I was wondering why the volume is not there. Yeah, here is volume. Right. Let's take some stock and then find out what is this volume selling. Take a look at this here. See, there is a huge volume here. Markets have already gone up substantially. GMR Airport, whatever stock is. Markets have been going up from what 28, 30, 35, 40, whatever it is. So from 20, it's already rallied to 100 rupees. 4x is here. Correct? Now take a look at this. At this top here, right, there was a huge volume. Correct? Now there is absolutely no continuation there. If this was institutional buying, why there was no continuation the second day is my question. Right? Now the market comes down. Again, this resistance was here. This resistance broke out. Now when the resistance is breaking, look at the volumes here. Nothing great. So whenever the resistance is breaking, now the volumes are not there. Immediately market comes back into the resistance breakout area. This we call it as a trap. First thing is, do not be enticed with huge volume here. Huge volume, narrow spread. This is what I'm speaking about. So now there was a fall here. Now this fall does not have volume. Then the rally happened, tried to break the resistance, narrow spread, huge volume. Narrow spread with a decent volume. Resistance broke, right? But again, market turned in immediately. This is the concern for me. Resistance with not a great volume, as in if you look at this volume and this volume, volumes are absolutely dwindling here. Resistance breakout, this is the concern for me. Now look at the subsequent rally here. This rally was associated with a very low volume. This is a poor demand. Whenever you see a rally, whenever there is already a trap here, whenever there is already a climax here, buying climax, it's called as a buying climax. So what are the things that you look at? Let me just write a couple of things before I go to the chart. Now there is something called as, just give me a sec. There is something called a sign of weakness at the top. What are the signs of weakness that I'm going to look at the top? You will see buying climax. You will see a buying climax. Then there will be a poor demand area, right? Sometimes you will also see an upthrust. I'll show that in the chart with an upthrust then, right? Then you will see as the market start falling, you will see volumes are increasing there, right? Even if there is any rally, you will see whenever it's a poor demand, it basically means that the volumes are not picking up as the market goes up. Then the last thing you will also see is you will see narrow spread high volume candles where this is basically not a selling. This is basically not a selling, it is offloading in the market. This is what you have to understand. You will see a buying climax. What is a buying climax? It's a climax of the movie. You will see a huge volume. You will see a huge volume. But after that, there is no continuation in the price. If huge volume was actually by institutions, why there is no continuation? Question that. If there is so much of cause, where is the effect here? There is a poor effect, poor continuation here. That means the big guys did not buy, it was offloaded. Poor demand. That means after the buying climax, you will see a rally. That rally is not accompanied by volumes. Poor demand is there. Sometimes you will see market going up sharp and market on a huge volume, but close at the low. Upthrust is a place where you will see something kind of a shooting star. What is this? You will see a rally in the morning, but at the end of the day, closing time, you will see price could not sustain the high, came back and closed lower, and this happened to be with huge volume at the top of the market. This is basically called as a upthrust. Upthrust is where price went up. There was a up move, but it could not sustain. Came back and closed lower. Closing lower on a high volume day at the resistance or at the market top is certain sign of weakness for me. Now this volume increases as the market start plummeting, and you will see narrow spread with high volume. Basically, they are offloading the stake. So buying climax, upthrust, narrow spread with high volume, poor demand, that means up move will be not having much of volumes, and then you will start seeing what is going to happen. These things we will start seeing in most of the stocks. Correct. Let's take a couple of examples here and then look at this. Right. At the market top, there was a huge one that was coming in here. So market came down. Right. Again, tried to break out. You will see lack of demand here. The poor demand or lack of demand as you can see. Now on this red candle, there was a volume that was coming in here. You can see the volume was coming in. Now again there is a rally. This rally doesn't have any volumes in it at all. Volumes are lacking. Now as the market starts coming down, you will see volume picking up. Correct? You will see volume picking up there. Let's take another example. Lupin. This was a recent act. May I can comment. See, look at this. There was a resistance breakout with huge volume, and then there was a upthrust here. Take a look at upthrust here. Price went tried to go up, could not sustain the high, came back down. The volumes are high. Resistance breakout. Immediately it comes back into the resistance breakout area. Not a healthy sign. Immediately there. At the top is where you will see again here. See here, there was a resistance here. Resistance tried to break out with huge volume. Question it, if there is such an activity, why the market's not continuing there? Why the market turned around? Why there are low demand candles here? Try to understand this here. There was a resistance breakout here, right? There was a resistance breakout. Huge volume is there, correct? Again on this candle, there was a huge volume. But after, if this definitely a buying from the institutions, why there is a low demand candles after that? Why did market came back inside the breakout area? These are the concerns. And why the volumes are again picking up? Why this rally had absolutely no volumes? Why this rally did not have volumes? This is basically a news-driven trade on that day. Poor demand already here. They broke with huge volumes, fair enough. And again, why these huge volumes were not? Why this cause was there? Why there is no effect in the price? Why there's a low demand candle? Why it came back here? Now on this day, for the final up move, right? Why there is no volume? Why the volume started increasing there? Leave the footsteps. Look at this. They'll always leave you something to think about. Pick up any stock to a consumer. Where stocks where market made a top these recently? Apollo Hospitals, Tata Power. Which of the stocks made a top of late? Any stocks? Let's take Adani Enterprise. Na? There was some news around. See, news about Adani, Gautam Adani, we already knew about, right? Now take a look at this. The news came here on this day. You can go back and look at it. Look at the confirm with the news. The news was coming up here, right? But look at what was happening here in the stock. There was a news here. News was here. Now again analyze this. What are the footprints here? Look at this. Now there was a huge volume green candle here. No continuation. Next day market start coming down. This is the concern I have. I don't like this kind of huge volume after a substantial up move. Right? This is a classic upthrust that was happening into this distribution area. Right? There was an upthrust. What you see in upthrust? Market went up, sharp rally was there, huge volume, but where was the continuation? If this was really institutional buying, why are they not taking the market higher? Now when the market went up here, why there is no volume? Poor demand, upthrust, buying climax, right? And now there is one final blow. Market gapped up, huge volume. Why there is no continuation? Why it came back sharp back in? Who bought this? This gap up usually happens on the day of the news, euphoria. You think, okay, something happened on this day, but the clue was here. The clue was already here. Poor demand was seen, buying climax was seen, upthrust was seen. Now a final euphoria, final blow, a trap was seen. They offload everything, gone, case over. Now the strong hands have put their shares into the weak hands. Now the case is over with this stock. Read the stocks, read the volume print. If you don't see a volume, because volume is the key here, not the price. If you just look at the price, okay, there was a resistance breakout, a small green candle, you will see that's it. The story is here. How big the activity is. Correct? I'm making sense. Now look at it recently. I can comment on March data, not a problem. The market was falling here. Look at this. This is a climax in selling. Selling climax, huge volume. Huge volume. Why is there so much of look at this here? Read the chart properly. If I remove this if I remove this volume here, you think it's a normal day. Such an effort has been put by the market. Why there is a very small red candle? Why is this? Question. Was it a selling volume? If it was selling, I would have witnessed a big red candle. Why there is a small red candle? And after that, there is no continuation. Why? Now, after this, start reading this here. All green candles had a higher volume. All red candles were a lower volume. This is the path of least resistance for the market. Path of least resistance in the market, you can clearly see in the volumes, not in the candles. Candles are not very enticing for me. The story is in the activity there at the bottom. Correct? This was that news about Adani 2023. Correct? The opposite side. I spoke about the sign of weakness here. I look at the opposite here. What is the thing that you will see? At the bottom, you will see selling climax. This is often clubbed with bad news. The bad news, the panic is seen, and in the panic, the weak hands are offloading, the big hands are buying. Why are they buying in the big hands? Because see, the problem of big hands or the strong money, the big money, is if they start buying, their own buying pressure, their own buying pressure will lead to the market higher. They don't want to buy at a higher price. That is bad business for them. They want to buy at the lower price. When there is panic, when the retail or the weak hands, what is weak hands? I told you, they got into the stock at a wrong price. They're already sitting in a loss. They are motivated to sell on a small trigger in the bad news. Those are the weak hands. Motivated sellers, we call them as. They are already motivated to sell in the P&L, already it's deep red. And bad news comes, they start offloading. This is a beautiful place for the big hands to start buying without damaging the price. Damaging the price meaning their buying pressure should not lead to a further rally in the market. That is what their intention is. They want to accumulate as much as stocks from the weekends at the panic stage so that they don't have to buy at a higher price. Selling climax is seen. Selling climax. After the selling climax is seen, look at this, understand this business properly. Because the market is still bad, the news is still bad. Before they commit big money, they want to test they want to be 100% sure they are not against one more institutional selling. Maybe one institution or the one house is buying, maybe the other big house is actually selling. Now when there is a actual selling that is happening, big guys if still selling, the guy who bought here in the panic phase, they may be on the wrong side, right? They don't want to be against one more institution. Right now, they what they're going to do is on the panic day they bought. Markets were in a panic, they bought some amount of shares. Now after they bought, they before they start committing serious money into this market, they will test. What they will test? Now they will see a low volume fall in the market. You will see a low volume fall. Why this low volume fall? There is a saying, gonna be test the waters. They are testing the waters because they don't want to be buying against some huge selling. It's bad business. They'll go bankrupt if they start doing this again and again. They want to be absolutely sure that they are not up against a big selling. So they themselves will start selling on a small quantity. You will see a low volume fall. This is like a this they are just testing the waters. If this fall, does it motivate somebody big seller to start come and start selling into this market? They will want to see this. That means they do not want to see a huge volume, big red candle into this. If that is coming, they will get out of this market as soon as possible with a small loss or maybe at their entry price because they bought at the lowest price now. So they could enter at again. They could exit probably at a decent price. Now again what they'll do, they'll take the market higher. So now if this is a low volume test of supply. If it's a low volume test, it's a successful test. Now when the market start falling now you understand this. Let's say somebody on this rally, if let's say somebody bought here, what they will do when the market was going down, these guy who bought here, they are in losses. Now what is their final prey? Okay, let the market come back to my buying price, I'll exit at the break even. That is their motivation, right? So when the market comes down, these people will start booking their profits, right? And there are a lot of people who understand resistances, they'll start selling here. So there is a selling here and there is a poor buying. This is not a strong hand. This is not a strong hand who wants to buy. They are just demotivated right now as they're in losses. Now they want, as soon as the market comes here, right? As soon as the market comes here, these buyers who are sitting in loss who bought here, they want to exit. They want to exit by selling. The people who look at resistance, they start selling here. So there's a lot of supply that's going to come in here. So they want to get rid of all this weak hands selling into the market every small rise. See, there's the biggest problem for institutions. If every small rise, if the sellers or the weak hands start selling into the market, they have to absorb their supply, commit more money, and then take the market higher. It is bad business again for them. Absorbing the supply is a big business for them. They want to shake them out, right? So then what they'll do, they will test again. Right now with huge volume, they kind of try to break this support with with a small volume, but they will break it. Price will be bigger. Price move will be bigger. They will create shakeout. That means they want to ensure that all these weak or weak sellers, weak buyers basically holding the stock, they want to get rid of them. Now they are motivated. So everybody is out. They hit all the stop loss also. Now what they'll do is they will start taking it higher. Now when they're doing it, when the market is at this resistance, they will do one important thing. Again, they might see somebody selling again, somebody trying to sell again. So they do not want to be caught up in the frenzy of sellers here at the resistance area. They want to overwhelm the sellers at resistance area. What they will do is most often than not, this resistance breakout usually happens on the gap up days. Why gap up is required here? Because they see breaking 26,300 resistance on Nifty intraday is very difficult for a simple reason that there will be a lot of sellers sitting at 26,300 thinking it's a resistance area, thinking it's an all-time high. They want to sell, make some money because last 1.5 2 years, whenever market went to 26,200, 300, if you have sold, you made money. We tend to repeat the same thing at 26,300. When you sell it, they have to absorb this and then break the market higher. So they are not ready for the absorption supply. So they want to overwhelm you. They will not give you a chance. Now go back at resistance area. Think about it psychologically. Oh, market is at 26,300 resistance. Market may not break out. You start selling. Now what they'll do is they'll give a gap up. They'll give a gap up or a huge volume candle they'll give you. This is what it is. High spread, huge volume candle breakout or a gap up so that they will not be caught by the frenzy of sellers there. So they don't have to put extra effort to break this resistance. That is what they'll do. Now they are ready to absorb whatever small supply is going to come. Now whoever, if somebody, there is a seller here, there's somebody seller here, if the market gaps up, start continuing, the seller will be motivated to exit with the stop loss, so they'll start buying. That will add to the demand. Somebody, let's say somebody was bought it, some intelligent guy was bought it, the market start going, they will not sell because they're in profits now. Why would they sell it? So it's a win-win game for them, right? So now they are prepared. Now one more test they will do. Now they will test again. Now this was a high volume breakout. Now when the market is coming down, you will see a very low volume. This low volume fall, high volume rise is a classic case of path of least resistance for the market is on the upside. We have to find out where is the resistance, least resistance for the market. If there's a tug of war between buyers and sellers, I want to be with the people who are actually not resisting too much. I want to go there, right? So now the market is telling me with the high volume rise, low volume fall, high volume rise, low volume fall, is telling me the path of least resistance for the market is on the upside. Let me better be on the upside. This is what you will start seeing here. Now, as soon as the market start going up, you will see higher volume, higher participation. When the market's coming down, you will see low volume. That means this market is prepared for a rally here. Why this fall will come? Why the bear market here? Look at this bear market. Whenever the bear market is straight down, the path of least resistance on the downside is very, very smooth. Why? Because the strong hands are not sitting there and the weak hands are demotivated. They keep selling it here. So there is no buyer interrupting when the markets are falling. The buyers are not interrupting. But when the markets are going up, there's a lot of interruption. Somebody will buy at the swing traders will come, a lot of other traders will come. They keep exiting, create new resistance again and again, again and again. So the bulls will take years together to create that kind of a returns for you and me. Got my point? Now let's analyze the supply, everything in here. Read the chart. Whenever there is a high volume activity, be alert. It is not easy to see a high volume day, high activity. Look at this big fall. All the bad news about Adani Enterprises, Gautam Adani was there in the market then. There is a huge fall. There was a fantastic correction, right? Fantastic correction, 4,000 odd levels to 1,200 odd levels. Now I see a very high volume, very high volume. Why the market closed higher on this day? If this was really actually a selling that is happening, huge volume, why the market did not continue? Now there will be a rally, again there will be a test. This is test. Why the test is on low volumes? I told you there is a test is always on the low volumes. They want to see if there is any big seller that is coming into the market. No big seller. They bought into this panic. They tested their theory whether there is any seller is there or not. That the test was successful. Now they start buying here. Now there's a resistance here. Take a look at this. The resistance was broken with a huge candle and then followed by a gap up. They bought in this area, accumulated 1200 levels, 2400 levels. People who start, you and me, like technicals, who start buying here on the resistance breakout, we will do their job. We will take the market higher and higher from there. As simple as this. Right? Take a look at this. Done? Adani Enterprises. That is how you will see the sign of strength there. Take a look at this stock. Whatever it is, let's just pull up something. And then we will see. See this? Whatever, Adani Ports. This was 2024, 1.5 years back. This repeats again and again and again and again. Huge fall, panic, high volume. Look at this. Market came down, unable to sustain the lows, went back and closed almost at the top of the range. Who bought here? High volume, let's say high volume, that means some big guy sold. If big guy sold, why there was no continuation? Why the market closed at the top of the range? Question. Right? Now when the market came down, look at this. Candles are big. Volumes are not there. Successful test of their theory. Now one more thrust here. High volume. When I say high volume, compared to last 15-20 days. High volume came in. Market made a low intraday, but pulled back, closed higher. Somebody is interested here. Now again a test. Low volume test. Now they are ready to take it higher. They accumulate whatever they want to accumulate around this area. Look at the game. So picture perfect. Whatever stock you pull up, right? You'll see. This is the buying climax. Fantastic news. Gap up. Huge volume. Done. And now look at this. What is happening here? Buying climax. Right? Resistance broke. Whenever I see a resistance break with huge volume, no continuation, start coming down the very next day, this is not institutions. Now there is a rally. When I see a rally, this is not even a candle. This is a small, narrow range candles with low volume. This is poor demand. This is not backed by institutions. Institution candles are like this. These candles is lack of demand or lack of supply by weak hands. Correct? So this is poor demand. Demand is not even there here. Buying is not even there. So if the institutions are not backing this move, it will not sustain. If there is a resistance breakout, huge volume, no continuation, institutions are not backing this. No institutional backing, no trade there. Same panic, huge volume. For me, when I start looking at the price now, see if I see just on the price now, if I remove this volume, I'm going to remove this volume. And see, this is a red candle. This is just a red candle for me. Like this, like this. I'll be scared because news is actually bad. You know Adani story 1.5 2 years back, right? The report came against them. It is actually bad. We are demotivated. We are scared. What is he going to do? What is happening inside the company? News is bad, right? But there was a panic. Later on, we got the report that something else was there. We know the story of Adani. I don't know to speak about the Adani story. But I want to say that the price may be misleading now. Whenever you see a huge volume, assume there is a huge buying or huge selling has happened. Show me the continuation. No continuation. At the bottom, after a panic, in the midst of the bad news, yes. That is what Warren Buffett said, right? Be greedy when others are fearful. And the opposite also is true. This is what I mean. I want you to bifurcate your emotions from what you see in the market. For that, please unfollow all the newspapers. Whatever you following the news, what is happening in the news, why the market went up. Don't worry about why the market went up. Market will do what the hell it has to do. It will do whatever it has to do. Now, what are you going to do with that information? Most often than not, that is actually against you. No news, no media is actually in favor of you and me. They are in their own business of broadcasting. They'll do it. Now, whenever there's a fear in you, whenever you see high volume, be ready. There's an opportunity there, right? Your own emotions will be the guide. But when should I think about? When you start hearing market tips about okay, you invest here, you invest there, from a common man who's absolutely not interested in stock market, who has never been in the stock market. If you're a common man, probably on a somewhere on the roadside, some maybe a small guy who is absolutely doing something else, but he starts speaking about stock market. That means, why did the stock market news reach a common man like him, who was nowhere connected to stock market? He never in his life he invested in the stock market. If he starts speaking about stock market, that means the news has reached him. There is an intention why the news was reaching him. Why that euphoria was created in the market? You have to think. Correct? Your emotions most often than not will give you a clue what is happening there. Take a look at this classic again, Adani Enterprises, Adani Ports this time. Opposite side. Huge volume. After a big rally, huge volume. Now question, if this was huge volume breakout, why there was no continuation? Why there was a fall next day, obviously on the huge volume? Why this rally was not accompanied by huge volume? Correct? Understand this. Institutions buying at the top on a resistance breakout is bad business for them. They will not do it. You and me will do it. They would have done much earlier than that. They will not commit their money on a resistance breakout. They will commit money before, when you and me are fearful. They'll commit money there. They will make you and me buy on a breakout so that they'll make money. So our own breakout will make money for them. Correct? Am I making sense to you guys? Are you with me? Any questions so far? I think I have touched upon a lot of things. I think this might have made sense to you. So I want you to be alert. Watch your fear. Your own emotions will tell you where you should look at for an opportunity. Look at the volume. Whenever you see high volume, be alert. There's something happening in that. There is no smoke without fire. There is fire there. Volumes will give you the fire there. Now, huge volume, get alert. Now, if the huge volume institutional buying or selling is happening, there should be continuation. Is there continuation? Is there? No. I think of the opposite. If there is a fear also associated with that trade, you are right. Did I make sense? Yes, with me?
Yes, Bharat.
Yes, sir. Any questions? I'll take any questions if you have. I can go on, I can show you a number of charts, but I want you to go back, take this information.
Hello, can I speak, sir?
Yes, yes, please.
Like you mentioned about high volume is basically sign of some euphoria, right?
I am saying high volume is a place where the big money is coming in.
Okay, yeah,
Correct?
big money, yeah.
Big
So
money is
big,
coming in. Now, that is one case. Now, you look at the market context.
uh,
Where is this happening? Is it coming after a rally, or is it coming after a fall, or is it somewhere in between?
okay,
Correct?
okay.
If it's at the top with high volume, resistance breakout, huge volume is coming, you think the opposite. Okay,
Mhm.
there's something is wrong here. Why there is no continuation?
Okay, right.
Effort, big effort in the volumes, but there is no big effort is there in the volumes, but there is no continuation in the price. That is where the question is. So much effort has been put by the institutions by buying, but why the market is not continuing? That is the concern that I have. So I have to start thinking opposite there. So this may not be buying, or this may not be saying, this should be opposite.
Okay, so basically, what you're advising us is that volume is very important criteria pertaining to the price, a cause and effect.
Correct.
I see.
See, price will also tell you a lot of things, but you should know how to read the price. But if you combine both,
Uh-huh.
this is a
I see.
classic this is a classic combination of Wyckoff cycles with volume spread analysis.
Mhm. So, in case the volume is less and the price movement is less, so
That
this
is that is
basically.
common now. If the price volume is less, price movement is less. That means there is no institutions backing. How can, without huge buying or without huge selling, how can the market continue?
I
That is
see.
absolutely normal. Correct.
Yes, a normal situation is there. Only thing is, what I observe is that the institutions or big money which is entering that happens occasionally. It doesn't happen on regular basis.
No, they will do it. That's what I'm saying. Now, that is what I can tell you. At the bottom, when you are in a panic mode, we start selling. They start buying from us. They are buying. Who is buying there? Who is the opposite party who is buying from us on a panic day, on a negative news day? That we have to question. And they will test it. This throughout this accumulation phase that I discussed about, right?
Yeah, yeah, correct,
So
correct.
whenever
So,
the markets are at the bottom, was that like Adani ports? I discussed about these topics, right? In throughout this case, they are buying here.
yeah, yeah, correct.
When there was a buying, there was selling climax here, they bought. When they were
Uh-huh.
testing, they were buying. There was slowly small quantity they're selling to test. Again, they bought here. Again, they bought here. They bought big quantity and broke the resistance here. They are buying here now.
Yeah,
Out
correct,
of
correct.
panic, out of our selling climax. The selling climax is what? There is a huge bad news. One thing. Second thing is a huge volume. A lot of people who are in panic, they start selling. When we start selling, who was buying there at the bottom? We
Okay.
see we see news, they see value.
Okay. So in panic situation, there can be lower price movement but high volume. That is mean
Correct.
institutions are.
High volume. See, whenever there is a high volume, it cannot high volume cannot be created by you and me.
Yeah,
Correct.
yeah, correct.
Correct.
So,
You and me cannot go and buy 10,000 shares or 1 lakh or 2 lakh, 3 lakh shares in the market.
so strong money is basically buying at low price fluctuation and in panic situations, basically.
Correct.
Okay, so basically, this is a very good way of studying the market, looking to price versus volume, and
Correct.
basically, panic situation is a buying time, like you mentioned.
There is a lot of depths to it. Correct,
Uh,
na?
so what you mentioned about be greedy when fearful, right?
I'm sorry. Yeah, yeah.
Be
So
greedy when fearful situation is
now
there.
I'm saying your fear is a first indication that something is wrong. Correct.
Yeah, yeah,
Whenever
correct.
there is a fear, there is an opportunity.
Um,
Emotional feedback from your own self, from the people around you. You know how to get an emotional feedback, correct?
yeah, yeah.
Now when there is an emotional feedback, now look at the market. Is the market falling? Yes, there is a market fall. Do I
Um,
see a high volume? Yes, I see a high volume. Do I see a price continuation of this high volume? No. That means that huge volume was a huge activity. It could be huge buying or huge selling. I am taking the opposite, which is huge buying. Why? Because the value is seen only when the markets are at the bottom. Correct?
yeah, yeah, correct.
The bottom is the place where we see value. Correct?
Yeah, correct. Yes, sir.
Whatever valuations you look at.
Sir, what you taught is very nice thing, and by any chance, yes, any other this thing write up or anything is there to have more
A
understanding
lot
of.
of things comes from experience. Reading volumes is not straightforward.
Yeah, yeah, no, I fully agree with you.
Correct.
But this is a very important concept you covered in this session.
Correct.
So, and very much happy to note this.
Fine.
Is it possible to get something on this thing, cause and effect, with
You
some?
you just you just search now. You will get.
Yeah, yeah,
I
correct.
told you a lot of things will come with not with a lot of comes with the experience. See,
Yeah,
price
yeah.
and volume is always there.
Uh,
So if I go details into what is volume spread analysis, because it's a combination of Wyckoff cycles and volume spread analysis. Both have to combine.
no,
It is
definitely. Now I'll definitely download and
yes. You
study
can
that.
download and see and start reading. If you need any sessions, I'll keep doing it. Probably once in a while, I'll keep doing it. If you keep give us feedback. If you like the sessions, I'll come with little more deeper concept of
No,
this
this
because
is a very good concept, very good explanation you have given, sir. Thank you so much.
my pleasure.
Because we were not giving so much attention to this, but you rightly pointed about this thing today.
So there is a if you go to Dalal Street now, Mumbai,
Uh-huh.
there is a saying that Bhag Bhagwan hai, correct?
Uh-huh.
I'll go one more step ahead. This is my own saying.
Uh-huh.
Bhag Bhagwan hai, I remember. I appreciate that. I am not denying it. But volume है ना volume भगवान का बाप है
Oh,
because
barabar.
volume cannot be please understand this volume cannot be created by you and me. Please understand this.
Right.
Correct. Now this volume, see there are 4,000, 5,000 stocks. How do I filter it? This was see, can you see the screen, right?
Yeah, yeah,
See
correct.
active by volume, you can see here, right?
Mhm.
Right here you can see active by volume. I'm just using this market scan here on
Mhm.
TradeGenie. Market scan, I go to equity and I'll take action by volume.
Okay,
So
okay.
whenever I see action by volume, I sort out where is high volume. So something is happening high volume today,
Mm-hmm.
correct? Then I'll pick the stock immediately. Okay, what is happening in a, why volume came in? What activity came in? Makes sense, right?
Yeah,
So I
correct,
cannot
correct.
comment on the recent story of yesterday's volume, right? But if there is a volume coming up, there something is happening here,
Yeah, correct, correct. That is so.
correct?
Mm-hmm.
So go look back and see. So volume becomes a fantastic scanner to find the stocks where the action is. Where the action is. So what is action? That means there's a volume, correct?
Yeah, yeah, correct, correct.
The action means volume,
Yeah,
correct?
yeah, yeah,
Basically,
yeah.
other way of saying where the money is going.
Yeah, yeah, correct.
Where the money is, that is where the market moves are, right?
Yeah, I
So
agree with you.
volume, if you're tracking volume, you're tracking activity. In turn, you're tracking money also.
Yeah, correct. And very nicely today is a new concept. Volume Bhagwan ka baap hai. Very good, sir.
Correct, sir.
Thank you. We'll be in touch, sir, with you. Thank you very much.
My pleasure, my pleasure. Please keep following the page, na. So, what do you call that? Where was this? Here, right? Follow this page on WhatsApp. So every uh, information that we're going to create in the market in terms of video, in terms of blogs, a lot of information we keep feeding for free of cost, correct? So follow this page so that you will get all the information right away,
So
right?
this basically what you mentioned the page. This is I mean, okay in this Trade Genie website only we have to go, right?
Correct. TradeGenie website and TradeGenie WhatsApp group is also what channel is also there. Okay.
Okay,
So
okay.
in the WhatsApp channel, you keep getting all the information every day. So we are pushing a lot of content there, free of cost. So there is no charge anyway. So this is from TradeGenie, so they are doing this, correct? So keep pushing and please keep sharing this page with others, your friends and family, so that they'll also benefit from this,
Okay,
correct?
sure.
So this is the WhatsApp channel. So keep following us on YouTube and other forums so that we will
Maybe
keep.
through the chat if we get this. Okay, no problem. This will.
We will. I think probably. I think we have all your emails and all this information. So probably we'll push a email asking you to join that.
Yeah,
So
yeah,
you'll get all the
please.
information. Correct.
So that will be nice of you. So we'll all will be connected. Yeah, correct.
Yes. 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 That should be good. Any other questions from anybody else before we wind up for the day? Hope did I make sense? So why don't you guys switch on the camera so that I'll take a small photo just for my uh, what do you call that, memories. Whoever is on the cam, can you? Anybody has a question? Probably yes, you can. And meanwhile, also help me